regulation. Well, who's regulating right now? Who's in charge? Oh, wait, Elon Musk is in charge.
Yeah, some weakness in quantum today. Don't know what's going on other than the obvious, which is, these stocks have been pretty weak. Over last week, we've seen some signs that maybe this big rally is over. Yeah, the Tesla's really interesting. I was talking about this last night in Discord. And again, I'll preface this by saying I have nothing but respect for our overlord Elon Musk. Look, the auto business, I think, is below expectations. There's no easy way to say that. You look at Toyota, it's 8 times earnings.
Basically, Elon successfully convinced the market to pay for robotics. And, if Elon tells you that robotics is going to make auto look small, it's like the world's biggest startup. It's publicly traded. You have an auto business, but, even if you assume the auto business is worth as much as Toyota's $300 billion. You're paying an extra $700 billion for Elon. It's a lot. Can Elon create $35 billion in earnings, call it 20 times earnings for the 700? You're already implying that he's going to create, that much in earnings. And so you can almost estimate how many units of robots he has to sell. Basically, he has to sell 1 million robots a year, 70K a year with a 50% net margin, 20 times earnings at steady state. So you are already paying for 1 million robots a year. Right now they sell 0. And I assume Elon will sell some robots at some point. I'm not including Robotaxi. I'm not really including self-driving. Although self-driving software has not been much of a boost yet to Tesla. So, as they sort of shift from auto to software, I do think margins will rise. So with all that said, maybe Robotaxi's worth another $100 billion. I don't know, maybe more. Uber's going to compete there. Waymo's going to compete there. I think Elon's further ahead on robotics, and I trust Elon's ability to commercialize a lot better than Boston Dynamics. Well, it's easy to realize what's priced in, and this is like my implicit DCF method. I'm just doing it in my head, but if you have a $1 trillion company, the biggest auto company is $300 billion. That's Toyota. It's 9 times earnings, by the way. Maybe Toyota should be 9 times earnings and Tesla should be bigger, in which case you could argue the max valuation for the auto business is not $300 billion, it's higher. But I think it's okay to just say, look, let's say Tesla Auto is worth $300 billion, which again, Toyota sells a lot more cars than Tesla. That's pretty generous, and it's a very efficient company. They kind of invented quality manufacturing. Maybe we shouldn't be comparing ICE and EV. Maybe ICE is just less profitable and less exciting, and EV should have a higher multiple. They would also have to start selling more cars. I think 300 max for the auto business is fine. So let's assume that, so basically you're paying $700 billion for other stuff, right? If you believe that the max the auto business could be worth is, and I'm just talking about the bare metal, then you're talking about, you're paying $700 billion for other stuff. Now, other stuff includes, Robotaxi. It can include robots, etc. But that's basically the idea. Let's look at TM is Toyota in the US. It's 7203 in Japan. But yeah, it's Tesla's about 100 times earnings. When you buy a share of Tesla, you value Tesla at $1.2 trillion. Okay, that equals 1,200 billion. Toyota, let's say, is worth 300 billion. And if we assume that's the max Tesla's auto business could be worth, which is, it's a major assumption. I think Elon would argue with that assumption and say, no, that's not true. My auto business can be worth $1 trillion. But let's just say that's the case for now. Again, the auto business isn't really growing for Tesla. Can it grow again? I'm sure it will. Yeah, and I think Mountain Shark could be right. I'm not saying I'm bearish on Tesla, by the way. I just want to be able to wrap my head around it, if that makes sense. And we can open the Tesla model too, by the way. All right, so Tesla is 30 billion in cash as well, 23 billion net. Okay, so you get you get 23 billion as well in cash. What do you get on revenue for auto? So auto's around 80 billion. Net income's around 7 billion. So let's look at it a couple of different ways. So 7 billion net income. And we could look at free cash flow too. TTM free cash flow, call it 11 billion. So either way, let's put, I don't know, what do you want to put on that? 40 times? You know, again, it's hard because Toyota trades at 8 times. But like arguably, again, with ICE, you're dealing with a really different kind of car. You have a lot of technology that Tesla could scale. And again, we're not going to value FSD this way. You have to value each business separately. When you just value auto, you know, you have to think about what am I willing to pay for an auto company? And is ICE that much different than EV? And, you know, there is this sort of similarity. A lot of it's the same. You know, you got to make a windshield, you got to make a chassis, you got to make the doors, you got to make the seats, you know, all that. But, you know, the battery is where the battery versus the engine is a pretty big difference. Is the difference between ICE and EV, ICE and EV worth paying a bit of different multiple? That's sort of question one, you know, but that's not the only question. The next question is growth, right? If Elon were here, he would say, Martin, I'm not done growing. And I would say, yes, Elon, that's true. You know, Tesla's still very early on its journey. You know, there's still a lot of things that they want to do. And again, pure auto. I'm just talking about pure auto. So he would say, if he were here, look, I haven't even come out with 1/10 of the amount of cars I want to come out with. And, you know, that's probably, you know, probably true. You know, you could come out with new kinds of cars. You could come out with sort of non-passenger vehicles like buses or something like that. So there's still a lot of models they can put out and, you know, other things like that. They could grow Cybertruck. You know, Cybertruck V1 didn't do that great, I don't think, but Cybertruck V2 could be really great. They could do a really high-end car. You know, there's a lot more that they're planning on to grow the car business. So you wouldn't want to pay, it wouldn't be fair to pay 8 times earnings for something that's going to grow a lot. You know, so I think that's a reasonable way to look at it. Now, pivot to other stuff. It's a whole different question, right? We're not thinking about that yet. We will think about other things in a second. We're just thinking about the pure car business. What is it worth? Not even including FSD. We're just saying, selling these hunks of metal, what is that worth? And I would say the better argument here is not EV versus ICE. I think the margins are a little better for, you know, for EV, but we're still looking at cash flow. We're trying to value the cash flow, right? So if we say the 11 billion, and we're saying 40 times because we think earnings could double or triple based on operating improvements and new cars over time. So I'm going to be generous and say the car business is worth 40 times today's cash flow. And that, I think most people would say that's fair, because ultimately, even though Elon's got this unparalleled track record of execution, right now, you know, the car business is not really growing. So that is sort of where I'll come out on that. So if you take those two things, which is cash in the bank and what the car business is worth, and again, you could do this yourself, do this at home and say, you know, Martin, I think you're wrong. I think we should pay 80 times for the car business because it's going to grow really fast. Because I know, I've done my research. I read Electric every day. This is a cool thing. I read this in jail. My dad, rest in peace, used to send it to me. Electric.co. So this is a company that just follows EVs. They're very good. If you're just like, I listen to all the EV podcasts, I follow this stuff really closely. I know all about this stuff. And you say, hey, Martin, you're wrong. You know, they're going to 10x their car business. So I'm willing to pay 100x or 200x. And that's fine. Or maybe you're more bearish on it. You say, I'm not going to pay more than 10 times earnings for that car business. And oh, by the way, your earnings number's not right. You know, if you look closely, this should be 6 billion or 3 billion and not 11. Fine. But that's the number I'm using right now. And it does not have to be like some holy number. You know, I really don't want you to think about valuation as, you know, you multiply 3 times 3 and it's 9 and it's unchanging. You know, that's not how it works. You know, I think the Graham-Dodd school wanted you to believe that, but the reality is this is more of a philosophical tool than some kind of monolith that we were going to pray to. You know, this is very different. So you could put big ranges on this. You could say, all right, well, maybe it's 200 to 800. And let's think about that later. Let's just pencil that down for a second. So in any event, we got that and we're happy. So basically, we now have to decide, we just do the subtraction and we say, all right, well, you are paying 737 billion for the other stuff Tesla has. And if you believe the car business is worth less, say 240 billion instead, then you're paying 900 billion. If you're a bear on the car business, and let's say you really understand that car business, and you're sure it's worth 240, then you're paying 900 billion, because this is the market cap of Tesla, right? It's 1.2 trillion. But if you say, you know what, I know it's worth 840 billion, because I'm really an expert in cars, then you're only paying 337 billion for the other stuff. And I say only 337 billion would be one of the biggest companies in the world. But we are talking about one of the best entrepreneurs in the world. So maybe that makes sense. So what are we paying 737 billion for? Well, let's take a look. There's a lot of stuff, actually. So the first is, let's do Robotaxi, because I think that's a really exciting thing. I think that Uber and Waymo are going to make a ton of money. The idea of a professional driver is going to be as antiquated as like a horse carriage driver. Like, nobody's going to ever, we're going to tell our grandkids, like, yeah, there used to be a guy that would sit and drive you around. And they say, what happens if that guy passed out or he was drunk or something? They're like, well, we die. We basically die. And, that was something that, happened way back when. So Waymo's worth, around 50 billion. So Waymo's, well-funded. Maybe the number for Robotaxi is 50 billion. Okay, but Waymo doesn't really have any cars. And making these cars is not easy. Whereas Tesla's got a lot of cars. It's got a big moat. Okay. Well, now how about Uber? Uber's publicly traded. You can just look at the market cap. I think it's like 150, 160, 168. But let's open our Uber. We have an Uber model. Here I'll show you why. And I hope we clip this because I could send it to Elon. So Uber's $80, 168 billion. But here's the important thing. Take a look at these bookings, all right? So you have mobility booking. And probably you can throw in delivery because the bulk of the cost of delivery is the guy bringing the thing over. But let's just do mobility. Okay, so mobility is 80 billion in bookings. Their take rate, that's 80 billion for 2 quarters. Well, it's 80 billion for 2 quarters. 80 billion for 4 quarters, actually. Take rate. So this is revenue divided by the actual charge. So they report the revenue. They're only taking 30%. It's actually a lot more than they used to, I think. 30% of the ride, 70% goes to the driver. Theoretically, if Uber took 100% of that, or maybe they give Tesla 10% or something like that, you can imagine how the numbers change. I mean, it would be absurd. And in fact, we can do exactly that. So what we can do here is we can add this back and subtract this. We're going to see how do these earnings change. The earnings were 1 billion before. They're 17 billion now. So it would turn Uber into one of the most valuable companies in the world. And if we say that's 4 quarters and 15 times earnings, it's $1 trillion, $814 billion company, if they could replace that take rate. And that's why Travis Kalanick was so focused on autonomous vehicles, because he knew that almost all of his, revenue and earnings were going straight to the driver, which makes sense. There's no ride without the driver. But if you take the driver away, look at how the earnings, go to infinity, basically. And you could even, lower the price. There's so many things you could do. So you could argue with a straight face that Robotaxi is somewhere between 50 billion and 800 billion. And, just to be conservative, I'd put it a little bit towards the bottom half of that. But I don't know, let's say it's 250. Because again, you got a guy who knows how to execute. Uber had a guy who knew how to execute. They fired him. They have a guy now who's very good, but he's said that, his Robotaxi strategy is to buy other people's Robotaxis. So he's going to be a customer of Tesla more than a competitor. I don't think we're betting on non-existent Robotaxis. I mean, if you know anything about AI can do a lot more than drive. We're talking about AI replacing, I mean, driving. AI could do quantum mechanics. AI could do advanced programming and physics. AI is one of the best computer programmers in the world. You think driving's that hard? No. Driving's disappearing. AI can drive better than any human driver. Regulation, well, who's regulating right now? Who's in charge? Oh, wait, Elon Musk is in charge. So I think it'll be fine. I think that, in fact, it'll be seen as unethical to allow human drivers because the robo drivers are so good. All right, so let's assume Robotaxi looks something like that. And I think this is, look, Waymo, some of the best investors in the world are in Waymo. I'm thinking about A16Z, and are really excited about Waymo becoming a 10-bagger. I mean, they're investing at a 50 billion market cap, not because they think it's worth 60 billion. They're expecting that whether it's Waymo and Google, look, this is Google's biggest bet, quite frankly, outside their core business. I think you're going to be doing just fine, assuming 250. I don't think that's too crazy, and I don't think that's too, look, again, the beauty of this is you can decide, right, your number. And I'm not saying like I will live or die on this hill. I'm just saying let's do this analysis this way for 5 minutes. We can do it a different way later, right? Just open your mind to it, see how it goes. Yeah, Waymo's private. All right. So, and again, we can sort of do these error bounds in terms of the worst case and the best case. So if you just think it's worth 50 billion and you just think all those 200 billion, well, you're now saying you're paying this for some amorphous asset 887 billion. Well, that sounds like it could be a good short. But if you also look at it the other way around, you are now getting 537 billion for free. You're already valuing the company at 1.7 trillion, and we're not done yet. So in my more middle of the road estimate, right, at 250, well, we've got 600 billion still like not accounted for, if you will. Again, this is valuation. It's very inexact. It's a lot of voodoo. To the innovators that create companies, this is sort of a waste of time. But somebody's got to try to be an investor. Somebody's got to try to come up with the math, and this is the best possible way to do it. That's right. I'm the best. Period. We the best. All right. Anyway, what else is here? Well, there's a couple of big businesses. There's FSD, and there's sort of this question about, is FSD a software company or is it included already in autos? And so you could say it's already included in autos and say that the range is 0. You say, that's already in auto. I'm not paying extra for FSD. But you could argue that Tesla will eventually transition to become a sort of more of a software company where you get the car for free, and there's a subscription software piece where you're just paying for that. And again, I would argue more that that belongs in the auto business. But again, if Elon were here, he would say, well, I'm still going to sell these cars, but that FSD, when it's really truly autonomous, that's going to be a big revenue driver. So again, it really depends on how you want to look at this. But if you do look at it my way or one way, and let's go to the model again, there are some hints in their filings of how much FSD they have for deferred revenue. And so I forgot the FSD pricing is. Do you guys know? There's no specific timeline. The timeline's infinite. For every company, you assume the company's going to last forever, right? There's no special timeline that's going to make a difference. If you assume that, who's got the prices for FSD? $8,000, and then there's a monthly subscription. So it's $99. It's $8K plus $99 a month. So it's $100 a month is $1,200 a year. And how many cars is he selling, or how many cars does he have extant, or will have extant, kind of existing out there in this, sort of pool? Well, we know they ship 2 million cars a year, roughly, or they will, roughly 1.8 million. So 2 million maybe next year or something. And so if you have 2 million times 1.2 billion, 1,000 a year, that's a $3 billion revenue stream. And you have 8K one time. Well, the 8K one time is less exciting because the The installed base is going to be more than 2 million. They just ship 2 million a year. So at steady state, if the car life is, say, 5 years, you can have 10 million cars doing 1.2 𝗟𝗓 a year, which is 12 billion in software margin revenue. So this could be, I don't know, 100 billion. So the FSD business is not going to really move the needle that much for Tesla, but it's not a bad thing to get. And again, whether or not you want to include this, and again, I think the best case scenario is even better, but let's say that's the best case scenario. I think this is probably just going to happen, period. Every car is going to have FSD, and every car is going to pay $99 a month to have self-driving. It's really kind of not that crazy to offer. So FSD, somewhere between, it's already in autos, or maybe call it an extra 100 billion. Because it's so small, I really do think we could just subsume it into autos. So let's erase it. Again, I think you could probably, if you wanted to, you could just add 100 or 200 to the autos. Maybe round this up a little bit, or pick one of the, somewhere between 440 and 840 for autos. If you're super crazy bullish, maybe, you make your own line at home.